Hey everybody, Nicole Johnson. Happy spring, happy April. This is my April newsletter. Hope you're all doing well and enjoying this time of year. Just wanted to send out a quick market update, let you know how things are looking. Also give you some tips on some mortgage note investing, just in case you are a burnout landlord and you're looking for some different ways to cash flow without the headaches of being a landlord. I've got some tips for that as well. But I'm gonna dive right in. I tend to not get super political. I try and keep things very neutral, but not gonna lie, the war in Iran has really impacted the market. I feel like before all of that disruption, we were really starting to feel like buyers' excitement, getting out on the market. Houses were going under contract quickly. We're seeing multiple offers. We're seeing you could feel the tangible difference in the market of really some excitement. And I feel like it was like, okay, yes, like we're finally getting some momentum. This is finally going to be the spring and summer that we haven't seen in many years now, probably, 2.5, 3 years. We haven't seen that just exciting, fast-paced real estate summer where houses are moving. So I think we were all excited for that. And then, the war happens. And anytime there is uncertainty in the market, in the economy, in the world, it causes people to hesitate. And real estate is directly impacted by that because of, obviously, these are big dollars that people are considering spending, big life decisions. And if there's uncertainty, they're going to pull back. They're going to get nervous. They're going to sit on the fence and wait and see what's happened. And that's exactly what we've seen, over the last 30, 40 days. So we're all kind of holding our breath now and trying to do our best and just going back to okay, this might take a little bit longer. I think we're really seeing that difference in the price ranges from 450 up to 600, 650,000. I think that price point, particularly for buyers, is what's being impacted the most because that buyer pool is really affected by gas prices rising, inflation costs rising. That affects their affordability and their monthly payments. And when they're trying to qualify for a loan, every dollar counts from a spending and debt to income ratio. And so they're really, really impacted by the economy and rising prices. And so I think that price range, if you have a house particularly for sale in that price range, things are just moving slower or it's more difficult, or you might go in and out of contract with buyers getting nervous and those might just be a little bit tougher transactions. And I think it's because of how tight their numbers are, and it just creates some nervousness and uncertainty if they're willing to get out on the market. If they're not, then they're still waiting on the sidelines. So you have less buyers looking at your properties in that price range. I think the upper price ranges, the luxury market, I actually think things are going really well. I'm seeing houses fly off the market a lot faster. I've seen houses that tried to get sold last year got relisted this spring and went under contract pretty quickly. So I think the luxury market is moving pretty well because, theoretically their buying power, they're not quite as impacted by, a few dollars in gas prices rising and inflation costs. So that's just my 2 cents on that. But we're all anxiously hoping that everything settles down and that we can still gain that momentum of the spring and summer, and that people will have that confidence to get back out there and really start buying, like regain that momentum that we were starting to see in early March. So that's my 2 cents. Other side note, I've got Marcus and I are working on our mortgage note investment business. We are like, our perfect clientele or perfect investor is somebody who is really tired of being a landlord because you've seen the headaches of it, but you love the cash flow. You just hate the phone calls in the middle of the night. We've really found that buying mortgage notes has been a great solution to that, where you still cash flow, but you own the paper and not the property. And so you're just collecting the mortgage payments every month. So you're still cash flowing. The numbers are fantastic. It's like an 8 to 10% return on your money every month. And you have an asset that is worth way more than what you paid for it. So if that is interesting to you at all, reach out, give me a call. We love working with investors and getting them set up on this because it has been such a game changer in our investment strategy since we shifted to this about 6 years ago. So if you're interested in learning more, reach out. Otherwise, I hope you have a fantastic day, and I hope you have a fantastic spring as well. And I will see you next month. Thanks so much. Bye.